Welcome back to the channel. And as always, if you copy trading, you are an absolute moron and you deserve to lose all your money. And with that out of the way, we're gonna look today at a stock called CROX, ticker CROX. Very well-known company. And as you can see, it's quite obvious that there's been a gap here to the downside following the earnings report that they did. And I have entered this stock last week, although I didn't publish it because I've been traveling, so I had limited time to update the thesis. But I'm short at the moment this stock, which is already making positive cash flows in my account. And typically, I would not enter a position like this right away, um, because if you are doing this, you are providing liquidity on the other side for people who were short ahead of that report to get out. However, in this case, I've made a bit of an exception because I see that there are fundamental reasons to continue shorting this stock. Of course, there's plenty of momentum, but if we are taking a look at a company like this, right, which is typically viewed at a low valuation, and that's for a reason, it's not necessarily about the multiple story, it's about the earnings growth. And you see that for a company like this, and that's the reason why it has this valuation, the prospect of earnings growth is dissipating pretty quickly. That's why, like many other companies, they struggled, right, after the high in November 2021, and they haven't recovered that price that they achieved back then. They have retested that a couple of times, but it's never really picked up again. So what did the company do? It's quite obvious, right? They have these funky shoes, if you want to call them, that relate to the retail apparel segment. And one of the reasons, in my view, why the market was paying a higher premium in more recent times, you can appreciate that here, right? Over the 2022-2023 period, there's a premium coming back. Was the launch of one of their brands called Hey Dude. And that is a bit more of a high-end footwear product that they're marketing. Well, we have the results now of the latest quarter on how this brand is performing. And it has not really been exciting by any means. So the guidance for the Q3 2024 shows that revenue is declined 17%, which is below expectations. The guidance for next quarter in this product was reduced significantly from previous expectations of up to low to mid-teens down to 4 to 6%. So we're talking here about a big difference in terms of the company expectations to roll out this new brand. Remember, this is a very sort of established brand, boring stock, no growth, right? And when you take away the element of new growth bolstering their earnings, then again it becomes a boring song where nothing happens again. Also, in not so hot industry with a lot of competition. So I do see the market dumping the stock in the near to medium term because of that. But it gets worse than that because management indicated that Hager's turnaround will take longer than initially planned, and that wholesale orders are down as retailers remain cautious. Management also noted increased caution in consumer spending patterns and even China consumer becoming more conservative. We have seen some areas where the China softness narrative is starting to shift in some sectors. Not the case here. But North America is showing signs of softness as well. And it seems that the structural tailwinds that management was expecting, such as the post back to school event, is also softening across the footwear. So with that, what is left? What is ahead for this stock? Well, it seems that there's going to be margin pressure, and the company is guiding to lower operating margins in 2025, as well as continued investment in SG&A that will put incremental pressure on EBIT margin rate versus 2024. So when I see something like that, I would argue, right, that with those kind of fundamentals driving the business going forward, we should see a performance that does not reflect the upward trajectory that we've been having year to date, which was not too bad compared to where we started, right? The stock was um, at a high of just about 165, having started at about 100. So that's pretty good. But we are now back where we started. And it seems that it's going to be going forward worse than what we've seen so far. So, worst case scenario, if I'm wrong, I would see probably the stock flat, but I think it will continue going down because, again, there's no growth prospects or revenue prospects going on here. So, with all that, um, the management commentary about 2025 was quite cautious. They see 2025 being about brand stabilization, which, yes, may be good in the manner of the consumer going down the line, but certainly not in the near term. And they also confirm that the first quarter of 2025 will be sequentially down from the Q4 in 2024. They also uh, noted that Easter shift timing is expected to negatively impact Q1 2025. So with all, it seems like the turnaround for Hey Dude is going to take longer than expected. These guys are going to be spending more money to make money. Um, there's a slowdown in demand, and there's uncertainty on how fast and how much they're going to be able to drive up performance. So I have structured a quick yet profitable options position here. Okay. And again, I've entered this already. So the prices that I'm going to give you are gone, right? I'm just catching up really with a lot of stuff that I'm doing. But I'll tell you my position just so you can see the kind of play that I've put here. I think there's going to be continued weakness in the near term. We'll see about price targets in the medium term. But for the time being, I bought the 15th of November, which is in 2 weeks' time, 100 puts over here. Okay. And at the same time, I shorted the 8th 99 strike puts at 45 cents, which, as you can see, that credit is almost gone. Now, today there's been a bit of a swing upwards. So the 15s of November are at a lower price than I bought them at the moment. I bought them for about $1. But I think we should see in the next few days the stock picking down back to the levels that it was yesterday. It reached 101. I think we'll see that over the next few days. And assuming we achieve a price target of 99, that provides me with a 370% return. That also provides me with the ability to restructure into a vertical at say 95 and get a small credit uh, for a very, very good ROI. But depending on how the market continues, there's a bit of froth at the moment from the Trump election. Um, we might just get out after picking up the credit. But still, 99 price target. We could be getting there or very close tomorrow. More than 300% return. Quick and easy. And will likely restructure to capitalize on further movement downside when the right opportunity comes around. Hope you enjoyed the video. See you soon.